Good morning, everyone, and welcome to NYSC TV Live. I'm Kristen Scholler, coming to you from above the floor of the New York Stock Exchange. And Americans are starting what is said to be a busy news day, always certain to impact markets and your money. Plus, of course, we're thinking of residents in Florida. And with that, let's get straight to what's on tap today. Well, overnight, Hurricane Milton making landfall on Florida's Gulf Coast as it continues to pummel the region. Our meteorologist in-house will join us with the latest details. And just over half an hour ago, the Bureau of Labor Statistics released fresh inflation data. Consumer prices increasing by 2.4% from the same time a year ago, a little bit hotter than expected. I'll be speaking with a Wall Street expert to break down the numbers and how it will impact, of course, the Fed's next rate decision. Well, with banks like nicely listed JP Chase and Wells Fargo set to start earnings season tomorrow, I'll speak with one of the top analysts covering this sector at large about what storylines could emerge and what questions executives will need to answer when those numbers come out. Well, getting back to today's top story across the country, Hurricane Milton making landfall on Florida's coast as a Category 3 storm. My colleague Trinity Chavez has been following this and joins me now in Studio 2 with more. Good morning, Trinity.
Good morning, Kristen. Yeah, that's right. So more than 3 million people are without power this morning, and officials say that around 31,000 residents are staying in nearly 150 shelters around the region after Hurricane Milton plowed into Florida at a Category 3 storm, bringing 120-mile-per-hour winds. Now search and rescue efforts are underway. To talk more about the very latest, I am going to bring in our chief meteorologist here at the New York Stock Exchange and ICE, Dave Margolin. Dave, thank you so much for joining us today.
Good to be here, Trinity.
So talk to us. What's the latest on the ground right now?
Yeah, so as you said, Milton made landfall last night at approximately 9 p.m. as a Category 3 hurricane with winds of 120 miles an hour. Landfall was near Sarasota, Florida, which is about 45 miles south of Tampa. Overnight, it traversed across the Florida Peninsula, bringing a lot of rain, tremendous amounts of rain, and tropical storm and hurricane force winds. This morning, it has moved off the coast, so it's off the coast of Cape Canaveral, and with it, most of the impact from the storm, the winds, and the rain, the storm surge should be coming to an end within the next couple hours.
And we're hearing that these rain surges are up to 18 inches, and we were even seeing waves that were upwards of 20 feet of water. What would you say now the search and rescue efforts and recovery efforts are looking like?
Yeah, so, that's just beginning now. Now that the storm has moved off, we can really focus on the, like you said, search and recovery efforts. In terms of the hardest hit areas, starting with the storm surge, it looks like it was from the Sarasota down to the Fort Myers area, where we've seen reports of 5 to 10 foot storm surge, which is very significant. The one maybe saving grace from this is most of that storm surge did stay south of Tampa Bay, which we were worried could see a catastrophic storm surge. So that was good, at least for the Tampa Bay area. But unfortunately for Tampa and then areas to the east, they did, as you said, see significant rainfall, some locations over a foot. So there's tremendous amount of inland flooding. That's going to have to be assessed over the next couple days, along with the winds that really kind of stretched all the way toward the East Coast, toward Melbourne and places like that.
Yes, because we're seeing significant damage in different focal areas of the region because Hurricane Milton actually brought on somewhere upwards of 30 different tornadoes.
It did. That was another aspect of the hurricane that oftentimes is overlooked. But in this case, Milton spawned an unusually high amount of tornadoes across south and southern Florida. Unfortunately, there were some casualties. The last I heard that there were over 100 tornado warnings from this system, which is very unusual. It's actually one of the highest amounts that I think we've seen in U.S. history.
Now, this hurricane happened straight off the heels of Hurricane Helene, which was just about 2 weeks ago. Is this going to impact specific areas harder than others because this is just on the heels of this other deadly hurricane?
Yeah, so I guess one fortunate part of this is that the impacts from Milton are largely going to be different than what we saw from Helene. Helene is impacting, or the longer term impacts are across western North Carolina, South Carolina, northern Georgia. And with Milton, it is moving off the coast and moving eastward. However, kind of as you're alluding to, this is going to stretch resources thin, right? You've got a tremendous amount of resources that are already up in that area of the Carolinas. Now you're going to need a lot of recovery efforts in Florida. And it's really unusual to have these two extreme events within a couple weeks of each other.
And what is the typical impact when it comes to the financial sector or the broader economy when we have hurricanes of this caliber that make landfall? I mean, are we seeing any specific changes or challenges in specific sectors like insurance, energy, or infrastructure?
Yeah, so there's going to be a lot of economic impact for sure, some shorter term, some longer term. So, just to go over some of the short, medium term, as you stated earlier, there's over 3 million people without power, right? So that's going to take days, maybe weeks. Again, there's going to have to be an assessment here over the next couple of days in terms of exactly how much infrastructure is down. The Port of Tampa, right, another major port, or the biggest port in the state of Florida. It is responsible for about 40% of the petroleum products that go in and out of the state. That means like gasoline, diesel, and jet fuel. And so depending on the amount of inland flooding and wind damage there, it could, it could slow down things for days, weeks in terms of the getting things back to normal. And then you have some longer term issues too. We've talked recently about ags and how Florida is a big producer of citrus, in particular oranges, lemons, etc. If there's significant damage to the trees, that could be a multi-year recovery. And then of course there's the insurance markets, right? We already know that the insurance markets, in particular like states like Florida and Texas, we've seen rates go up dramatically over the last few years because of hurricanes and climate. And this is only going to exacerbate that.
And we will continue to follow this story. Thank you so much, Dave.
Thank you, Trinity.
I'm going to send things back over to you, Kristen, in Studio One.
Trinity, thanks so much. And of course, we'll be watching these insurance stocks throughout the session as well to see how they're reacting in the wake of Milton. Well, stay with us because after the break, we'll dive into some fresh economic data coming out just about an hour ago, and of course, what it means for your money.
So I want to start off by talking about the company. Tell me about CloudWalk.
So CloudWalk is a payment company, a fintech in Brazil. We have like 1.7 million customers, SMB sellers, who use our payment products and banking solutions to sell more, receive money in a couple of seconds, and grow their business. So it's one of the fastest growing companies in the whole planet right now. You're crossing $500 million in revenue, $84 million in net income, growing high double digits. Like, we are booming, growing really, really fast.
So you've made your debut in the US this month, your first market outside of Brazil. Tell me more about the launch of Gym.com.
So Gym.com is a beautiful product. We are bringing AI, tap on phone, and instant payments to micro sellers. So every time a micro seller wants to sell something and receive like in a couple of seconds, they can use Gym.com. And when they receive the money and they need help to expand that money or define better price or get more customers, they can use the Gym itself, the agent, the AI agent on the app to help them. So it's a product we're bringing to US to fix the biggest problems that SMB sellers have here in the United States.
So you mentioned that Gym is based on AI, tap to pay, and instant payments. Now, do you believe that these are the major trends in the financial market?
Yeah, these are big trends. For example, tap on phone. That enables you to have your smartphone, iPhone device to be like a card payment machine. So your consumers can just tap the card in your smartphone and then you can receive the money in a couple of seconds. In a couple of seconds means that you're using instant payments to pay all the sellers. And finally, when you have like all the sales and all the purchases you need to do, you can use the AI agent to help you. And these are major trends that are reshaping.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio above the New York Stock Exchange trading floor. Well, one of the most highly anticipated inflation gauges of this season, the September Consumer Price Index report, came out this morning at 8:30 a.m. Eastern. And here are the takeaways. Headline inflation up 2.4% from the same time a year ago, just a hair hotter than expected, but still showing a trend of cooling. Month over month, that price index up about 0.2%, again a hair above the 0.1% expected. Well, core inflation, which excludes more volatile food and energy prices, came in at 3.3% and 0.3% from a month before. Now, ahead of this morning's report, the infamous FedWatch tool, which measures market sentiment, was pricing in about an 80% chance of a 25 basis point cut in November. In the wake of this report, traders now betting via the futures market that there's a 90% chance that we see a 0.25 percentage point rate cut by the Fed at its next meeting. So joining me now with more is Brian Vendig, Chief Investment Officer at MJP Wealth Advisors. Brian, thanks so much for joining.
Great to see you.
Does this inflation report change your investment thesis in any way?
Even though today's inflation report was disappointing in the sense that we saw a little bit of hotter numbers versus expectation, I don't really think it changes the outlook for where we think about the markets, both stocks and bonds, because at the end of the day, there was enough in these numbers to show that the Fed is just going to continue on with their dot plot. I think over the balance of the year with 2 rate cuts and about a percentage point of cuts next year. That's because really, even though the numbers came in a little hotter, they're still lower year over year than where we were in August. And also keep in mind that some of the drivers of inflation were actually more from seasonal items, such as airline tickets and food prices and the price of used automobiles. And one of the bigger areas of inflation actually showed one of the best numbers we've seen when looking at housing inflation, with owner's equivalent rent being lower over the last 6+ months. So wages and housing starting to move in the right direction, and we're still expecting profits to grow from publicly traded companies. So I think the Fed is still going to look more towards stability in the labor market than being so concerned about 1-month number print that was a little hotter than expected.
To that end, let's talk more about the jobs market, because we got those weekly jobless claims. We always get them Thursday morning. 258,000 claims, in fact, filed in the latest week on the state level, the highest that we've seen since August of 2023. What signal does that send you about the health of the jobs market?
Well, I think the Fed is really focused on the jobs market, especially when looking at small to medium business as well, including jobs, because consumer spending is showing signs that it's slowing, but Americans spend if they feel like they have a job. But right now in the short term, a lot of this data, Kristen, has actually been quite distorted, because also keep in mind hurricanes coming through the south previously. Now we have Milton as well. I think there's a delay in some of the numbers being reported, because even with a strong September's jobs report, only 60% of survey participants actually reported. So I think moving forward, stability in the jobs market is important, and we've seen the last 3 months revised up. But there's a potential for distortion moving forward, which is why I think the Fed is going to stay on this path of rate cuts to provide stability for labor as well as small to medium business in the U.S.
What does that mean for stock market investments? The fact that the Fed is expected to stay the course when it comes to more rate cuts down the line.
Well, it's kind of a two-prong attack here when you think about it from the equity investor perspective. If you believe the economy is not going into a recession, you're getting this North Star from the Fed of support with rate cuts over the next, call it 15 months or so. And you're seeing earnings growth, it actually helps to support cyclical stocks or more demand-oriented stocks get a little bit of an uplift in earnings power over the next year or so. Not to say that mega cap tech is dead, but I think from a valuation perspective, being aware where the risks lie is really important. The other part is small cap stocks have also shown to be an area historically that has outperformed as the rate cycle plays out, especially to an easing. And if we get that support domestically where there is stability in jobs and also in domestic supply, you can also expect to see earnings growth from smaller companies versus right now this dominance that we're seeing from larger ones.
Let's talk about earnings season. Delta Airlines did report earnings before the bell. Disappointing guidance, and the CEO Ed Bastian actually saying it had to do with some lower travel expected around the election. Of course, there is concerns around the election as to how that might unfold from a safety perspective. But big banks set to report tomorrow as well, JP Morgan and Wells Fargo. How does this set us up for growth? We had seen third quarter GDP growth coming in at 3%. Do you anticipate that earnings growth can exceed that?
So I think earnings growth can exceed what we've seen in the rear view mirror from GDP. And that's because we're getting contributions not just in, let's say, airlines or banks, but you're seeing a wider breadth of growth in industrials and healthcare and some of these other value sectors. So I think right now, markets are and investors are keen on what publicly traded companies are saying about the consumer. But again, I don't think it's time to panic that we're seeing the consumer being choosy on price, because at the end of the day, companies are learning how to do more with less and still preserving their profit outlooks.
It's interesting. We're still looking at fractional losses here at the open. Brian, we'll have that opening bell in just about 15 minutes time. Thank you so much for joining Brian Vendig. He is a wealth advisor. Well, stay with us because more than 45 IPOs have taken place at the stock exchange this year. And I sat down with the CEO of the most recent one. We'll have more on what he had to say about going public after this short break.
So now, Michael, with your deep experience in international banking, what have been some of the main strategies you've introduced to reshape HSBC's operations in the U.S. and Americas?
Okay, well, it's a great question. So it's really focusing on what we do as a company, and that's to support our clients internationally. When you think about it, 62 countries, and so we're here to support American companies as they go abroad, all around the world, in various countries, and also to help non-American companies, foreign companies operate in the United States. And so it's access to the deep capital markets, such as the New York Stock Exchange, access for our wealth clients investing in the United States and all its many different options that it provides, but also providing assistance, support, banking products, services, advice to all of the companies, the U.S. companies who want to operate abroad. So it's all about being international, and that's what we focus on here.
Now, you recently moved your U.S. headquarters to New York City at Hudson Yards. So how does this align with your broader goals in the U.S.?
Yeah, that is a great move. Hudson Yards is a wonderful development, the heart of New York City, the financial capital of the world. So we're very happy to move there. We're in a great building, the Spire building, which really is a fabulous new headquarters for us. And what we wanted to do is, one, show our commitment to our colleagues, to our employees, but also to our clients, the community, and to New York City. And secondly, design a environment where people want to come back to work. So we're a hybrid. We don't have a mandate to come back full 5 days. But what we did is really create an environment of collaboration, ideation, and an environment where people want to come back to work. So I don't have to force them. They come back on their own accord. And right now we have 80% occupancy, which is pretty stupendous given where we were before, which is less than 40%. So we're very happy about the results.
That's quite a high occupancy.
Very much so.
Now, your innovation banking franchise is celebrating its 1-year anniversary.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. Now, we've seen a flurry of IPO activity here at the stock exchange in recent weeks. On Wednesday, KinderCare officially became the 47th IPO, excluding closed-end funds, to list on the NYSE group this year. Trades with the ticker symbol KLC, and shares closed its first session of trade up nearly 9%. Well, the company, which is partnered with over 600 organizations, has more than 2,300 early learning centers and programs across the country. It was founded in Alabama back in 1969. I had the pleasure of sitting down with KinderCare's CEO, Paul Thompson, about the big day and what his company can do now that it's public. Take a look.
The organization is so excited to get into more communities, into more families, giving their childs a great quality education, and to work with employers to bring the same benefit to all of their employees.
And what are some of those benefits that we can expect?
Primarily about raising the level of education for children under the age of 6 and helping them be successful as kindergartners and moving and thriving in the elementary. Also just up-leveling and developing our own teachers so that they have a great career for them to grow.
What are the skill sets, the resources that teachers need in order for these students to thrive at your centers?
Our best teachers are so great about managing in chaos, working with each other as a team, celebrating the high quality experience for parents, and then developing a one-on-one relationship with individual children and what each of the child needs might be to be the most successful.
And I see here the largest provider of early childhood education centers. You referenced that, 6 weeks to 12 years old.
Yes.
any plans to expand beyond that or even into more centers now that you've raised a good amount of capital?
Absolutely. We see tremendous growth of opening up more centers, getting into more communities. We're in 40 states today. We expect to expand that. We have a lot of opportunity for growth. And then so many employers aren't providing the benefit of childcare. So for us to partner with more employers across the U.S. Is tremendous growth for us.
Is the presidential election a factor that could impact your business? And if so, how?
Yes. The great thing about childcare, it is a bipartisan supported initiative. They both celebrate, regardless of the side of the aisle, getting working families to be able to go back to work, to have a thriving economy, and for us to educate the next generation.
Your company valued at $2.8 billion, of course, on the eve of the IPO with where you priced at. A large company and certainly a new company
Yes.
here on the New York Stock Exchange under the ticker symbol KLC. What do potential investors or viewers need to know about your company as you embark on this new chapter?
It's everything about us being a growth organization and opening more centers, serving more families. In addition to that, what they're excited about is how flexible our platform is, how we'll continue to have a lot of options to grow our Creme de la Creme brand, our Champions brand, in addition to our KinderCare brand.
In addition to KinderCare's CEO, I had the chance to speak with the company's CFO, Tony Amandi, asking him about his biggest goals for the company now that it is publicly listed and traded. Let's take a listen.
We're just so excited to be public and having taken that next step. Most importantly, it's just keeping doing what we've been doing, right? Serving so many families and children and teachers and expanding what we can do with all of them. We're really excited to keep going.
How do you intend to reach those goals?
Look, this is a big step for us, right? It frees up some ability to make continued investments in our teachers, in our facilities, and expand the amount of centers and sites we have and serve so many more children and family.
Of course, the IPO roadshow is a very big part of the process. How has that educated you in terms of your strategy going forward?
You bet. It's just such a blessing to be able to just tell our story, first of all, right? It's just so fun to be out with so many investors, but the opportunity to hear what the investors are looking for in the future that we can do that still lets us serve all those families and children while still making our shareholders happy and great. It's just a really cool opportunity for us.
You raised more than $500 million in this deal. How will you roll that out over time?
We'll do what's best by the shareholders, right? And so as we continue to perform, continue to expand, continue to grow, we'll make the right decisions going forward and excited to keep going out.
How do you look at the right way to expand for the company?
We look community by community, right? So right now we're in over 1,500 centers and 1,000 sites for before and after. And there's so many opportunities out there to serve new families. And so we strategically look at where the best places to grow, best place to serve new families, and attack it that way.
1,500 centers that KinderCare collectively operates. Is there a target in terms of how many you expect there might be in the next 12 months?
Over the next 12 months, we'll add a few more dozen coming up, right, between our KinderCare brand and our Creme School brand to add to those collections.
Mm-hmm. Financially, at least, how do the brands differ?
Look, the Creme Schools offers a lot bigger. It's a wow-worthy moment, big, huge facilities, and it does a lot of rotation. So it's a bigger opportunity for families, and a little bit higher cost for the families that can afford that and want to pay for that. And that's the biggest difference.
And how would you describe the staple KinderCare offering?
I mean, that's the great one, right? I mean, that's where we are offering incredible curriculum, incredible engagement with our families, and that's the one opportunity for the children really to grow and learn and be so ready for kindergarten.
Our thanks again to the KinderCare executives for joining me yesterday amid its IPO. Today is the first full official trading session for this stock, and we'll be following it closely here at the Stock Exchange. Well, speaking of the Stock Exchange trading floor, we are just about 7 minutes from the market open. My colleague Trinity Chavez has made her way down to the floor. Trinity, it's good to see you, and what is the pulse behind you?
Yeah, so right now the crowd is really filling up just right behind me. I want to tell you a little bit about who's ringing the bell today. It's been a very busy week here at the Exchange. From IPOs to the 2024 Tech Summit, but now we're kicking off inaugural International Day in Freedom Hall. We're going to get to that in just a moment. But as I said, the bell ringer today is the members' Handicapped Children's Fund, which was founded in 1983. It's a nonprofit organization. Again, they are making their way up to the Bell podium to open up the U.S. equity markets in just about 6 minutes. But right now, to speak about International Day here at the NYSE, I am going to bring in my colleague, Paula. She is the head of Canada and Latin America Capital Markets, and she has played a key role in putting this event together. Paula, why don't you give our viewers a little preview about the inaugural International Day here at the NYSE, why it's so significant?
We are so excited with International Day that is kicking off today. This really is about bringing together entrepreneurs, C-level executives, and the investor community from all around the world. So the day is going to be packed with insightful discussions, panel discussions, networking opportunities, and then finally we have a party on the trading floor, which is always very, very fun. So we're very excited about that. It's really about the idea behind the event was to have a platform where these entrepreneurs could meet, have insightful discussions, share ideas, and really create relationships that transcend barriers and borders. So we're very excited.
And I'm very excited too, because I'm going to be covering this also for NYSE TV Live, but it's very significant in the sense that all of these people are coming from all areas of the world amid weather conditions that are unfolding in different areas of our country, but they're coming here to the NYSE to have these discussions. That's very important to note. But also you have a very special guest who is kicking off International Day at the NYSE, and you are going to be having a fireside chat with Brazilian legendary football player, Ronaldinho. Talk to me about that fireside chat and what our viewers can expect to hear from that.
Yes, I am so excited about that. So yes, Ronaldinho Gaúcho is going to be here. He's going to be our celebrity keynote speaker for the event, which is huge. The entire world knows of him, loves him. And really the idea behind having Ronaldinho here is his ability to speak to these entrepreneurs about performing under pressure, basically.
Well, thank you so much, Paula. We look forward to hearing about your chat. Now, don't go anywhere. The opening bell is on the other side of this break.
Orion is a global leader in the carbon black industry. Carbon black is used in a lot of products. It's used in vehicles and tires. It's used in a lot of the rubber around within your vehicle, within a car. It is used in a lot of specialty markets. It's used in the fiber market. So, for example, athletic wear. It's used in the ink market. The number of ink opportunities. There's used in the coatings market. So if you look at a high-end coating on a car, for example, you'll see it there. And really importantly for us, it's used in the electrification industry or market. And what I mean by that, so looking at EV batteries, as you're seeing the evolution toward electric vehicles, we have products that go into EV batteries. We also have products that go into high-end voltage cables. So for example, those that come from wind farms or from solar farms to transmit the electricity. So our products go in all those areas. We're a company that has 15 manufacturing facilities. We're building our 16th one right now in La Porte, Texas, just 30 miles away from here in Houston. We're in 5 continents. We have about 1,600 employees across 80 countries, so we're a very global company. We've been around our heritage goes back over 150 years. For a long time, we were part of a specialty chemical companies within Europe. For a few years, we were private, and in the past 10 years, we've been a public company.
So now, while you are a part of day-to-day items that everyone touches, Orion's not a company that's really well known. So what are some aspects of the company that are not well understood?
I talked about the carbon black industry. For a long time, it was an industry that was, its profitability was kind of mediocre, didn't have the financial wherewithal to reinvest in itself, not just Orion, but across the industry.
All right, we are about 20 seconds out from opening the global equity markets here at the New York Stock Exchange. We're going to tune into that moment in just a few seconds, but it looks like right now we have a softer market this morning. We're reacting to that CPI data. We're going to get an update right after we tune into the opening bell.
We are officially underway for trade this morning. Stocks fairly steady at the open, same as the case with yields, in fact. But we see shares sitting right near record highs, and investor sentiment has been strong. Adding, of course, to resilience that we've seen in this market is cooling inflation, as this morning's report showed. Expected earnings growth this reporting season and those ongoing rate cuts forecasted by the central bank. So, of course, it's natural to ask, what does this mean for companies interested in going public or IPOs? Well, joining me now is Matt Kennedy, Senior IPO Market Strategist at research firm Renaissance Capital. Matt, it's great to have you this morning. We had KinderCare IPO here at the Stock Exchange yesterday and a big IPO, Standard Aero, last week. What are the trends that you're seeing in the IPO market right now?
Right, so as you said, back-to-back weeks of large IPOs. It's a very exciting time. A lot of companies are thinking about going public. We're right now in the final stretch of the biggest stretch of the year, where we get these companies targeting fourth quarter IPOs. We will have another brief period in November and December, but what we're seeing is a lot of companies really preparing for 2025 listings. It seems like we're going to have a fully normalized, healthy, active IPO market. We've seen that gradual improvement, that acceleration throughout this year, but all eyes on 2025 as well.
What are the sectors, Matt, that are gaining the most momentum, especially as rates come down and we head into 2025?
So we've seen continued issuance from biotechs, and private equity has been very active. So the missing piece of the puzzle here has always been the VC-backed tech group, that unicorn class that got those valuations just slashed in 2021. So we expect that to be really the biggest gainer in 2025. The reason for that is, so for the PE-backed companies, they're paying less in coupon payments now with lower interest rates. So that increases the valuations there. Makes sense. But with the VC-backed tech group, those valuations are also improving from lower interest rates because the value of their future cash flows increases. So it really, the lifting tide raises all boats, but the biggest gains should be from the tech unicorns.
How important are overall market conditions? I mentioned earlier the resiliency that we've seen in this stock market, investor sentiment strong, and finally those anticipated rate cuts that I think many investors and Americans, probably startup founders, were hoping for at the start of this year. But how does that really factor into a company's decision to actually tap the capital markets?
It's essential. Returns are one of the most important elements of an active IPO market. If investors aren't making money on IPOs, then you won't see any future deals. So the fact that markets are near all-time highs really does indicate a receptive stock market for new issues.
So to that end, Standard Aero, huge company, went public last week, as I mentioned earlier, listed here at the Stock Exchange. And according to your firm, Renaissance Capital, it was the first $1 billion plus IPO since that 2021 boom, fueled by low rates, to actually price above its range. What kind of signal does that send?
A very strong signal. And it tells you, I think that there's been a lot of attention on the VC-backed tech group, maybe less attention on the private equity-backed LBOs, the larger, more mature companies. But I think this tells us that there is demand for these types of companies. I mean, Standard Aero it was very large, a leader in its industry, improving profitability, growth rate was excellent, and a valuation to match. So when those elements combine, investors are interested. We've seen this year the top 10 largest IPOs have averaged a 45% return from offer. So, like I said, if investors are making money, then we expect IPOs to follow.
Interesting. So I'd be curious to get your take, Matt, just in terms of your overall outlook at Renaissance Capital, the firm's outlook on where the broader stock market goes from here, because of course we know that can drive the IPO pipeline.
Oh, I wish I had that crystal ball to tell you. One of the things is that, the stock market is unpredictable. So the companies that are going public right now, I think, are doing so because of the current conditions. We don't know what 2025 will look like, but up to this point, conditions have continually improved. We do often point to IPOs as being the canary in the coal mine, an early indicator for how future stocks may trade. So, that can tell us that there's more risk appetite right now, more demand for growth stocks, which is usually a good sign. But we'll need that to continue in order to see active issuance throughout next year.
Matt, I also want to end here by getting your take on how investors, how our viewers really can expect an IPO to perform after its debut. I know you've looked at a lot of data at Renaissance Capital as to what the traditional historical trends are, and what can you share with us?
I think it's important to always keep in mind that you don't need to buy on the IPO. You may follow the IPO market and see a deal that looks interesting. I would say put it on your watch list. Don't feel like you need to buy it on day one. And then we often look at that period from 2 to 6 months after the IPO, maybe when some of the initial hype has died down, to look for an entry point. Some of these stocks can get very hyped up and then pull back a little bit. So you might find your entry point there. Looking at the top 10 largest deals this year, I mentioned that they had averaged 45% return. Half of that was from the first day, the other half from aftermarket trading, that post-IPO follow-through. So, investors are making money even if you can't get in on the offer price. But as to the individual deal, I would say put on your watch list just the ones that you think look the best.
Matt Kennedy with research firm Renaissance Capital. Matt, thank you so much for joining.
Thanks.
All right, well, I mentioned it's a busy news day, certainly a busy news season, that is, and also on tap is earnings reporting season. So we'll take a closer look at what to expect from the banking sector when we come back from this short break.
Level 10 is a Seattle-based software company. We build transaction infrastructure to help companies decarbonize. We help them do better deals faster. And we do that with an ultimate goal of making it as easy to purchase renewable energy as it is to purchase fossil energy.
And tell me about the biggest trends that you're seeing right now in the renewable energy sector.
So the first trend is a supply-demand imbalance, right? And so on the demand side, there's just massive electricity load growth. In the last year or two, load growth forecasts by utilities have more than doubled. And we expect that to continue. So that's AI, that's electrification and electric vehicles, that's policy-driven industrial growth. So all of those things come together to create this massive demand spike. The supply side is very different. It's been largely stagnant. There's permitting delays, there's interconnection delays for new renewable energy projects. So those two things together kind of create an upward pressure on pricing.
And how do you see IRA legislation impacting this market?
Two major developments that it brought. One, it gave us a runway. So in terms of the tax credit certainty, so renewable energy in the U.S. is driven in large part by the federal tax credits. The second is that it brought a lot more financial flexibility. So those tax credits, usually the developer doesn't have the tax appetite to use them. So they had to bring in a handful of banks to monetize the tax credit, and that created a bottleneck. One thing the IRA did was that it gave developers the ability to sell their tax credits to a broader pool of corporates with tax appetite. And so that created a lot more financial flexibility and really a mechanism to realize the full potential of the IRA.
So I know that level 10.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller above the trading floor. Well, with trade underway, we are getting ready for earnings season to kick off in earnest tomorrow. Banks like JP Morgan Chase and Wells Fargo are set to report their third quarter results on Friday. So joining me now is Moshe Orenbuch. He's the managing director covering the specialty finance sector for TD Cowen. Moshe, it's great to have you on the show today. We see stocks pretty steady at the open, a little bit to the downside. But how does the performance of these big banks impact your coverage area of consumer financials?
Sure. So the companies that I cover are all in businesses that are kind of dominated, even in some cases, by the big banks, and so their outlook is going to be very, very important to the stocks that I cover, particularly JP Morgan, who's kind of a bellwether in most of the businesses, and their management, kind of has a lot of credibility with respect to views on the economy and macro issues.
So I'm curious in terms of your expectations when it comes to JP Morgan Chase. We had Delta report earlier this morning before the opening bell. Disappointing guidance. Might be hard to link the two unless we're focusing on broad economic trends.
Right. So absolutely. I mean, I think they will focus on some broad economic trends. JP Morgan always gives some thoughts on the underlying consumer, which investors tend to think, very carefully about. In the past, JP Morgan has often been, I think, concerned about underlying unrest or kind of, macroeconomic issues around the world. And, those are at probably a slightly higher level now than they might have been 3 months ago. So I think those are things that we could look to. And then specifically, they're a leader in the credit card business, and I cover a number of credit card companies. Certainly the specific trends in terms of spending volume, balance growth, and losses are something that investors are going to look at.
And what are your expectations this earnings season, Moshe, when it comes to how consumers are spending and really the state of debt?
Yeah. So what's been interesting is spending growth has been decelerating, more so at the lower end, middle to lower end of the income spectrum than at the high end. But you're seeing some pressure kind of across the board, not material, but some pressure. So that's definitely out there. Interestingly enough, from the repayment of debt standpoint, there the story's a little better. The high end, the income consumer is doing reasonably well. And even at the middle lower end, the pace of delinquency growth has stabilized. Things aren't getting better yet, but at least it doesn't appear that they're getting worse.
Mm-hmm. Higher interest rates obviously have had a big impact on the banks. I think some might have thought traditionally that rising rates would be a positive because of net interest income, right? Banks make money on the money that they loan out, and higher rates can be beneficial, but certainly we've seen that have a different narrative. I'll say that since the Fed started raising rates in the wake of inflation. With the Fed still expected to cut rates, how is that going to impact companies like the ones you cover?
So the ones that I cover are not hugely rate sensitive. So in general, on the one hand, first of all, lower rates will help their customers because their customers are have been paying those higher rates and have been pained by that. So I think from that standpoint, they will have a benefit from the lower rates. In terms of their earnings in general, it's not a huge deal because the companies that I cover don't have the big free balances that are represented by large checking account balances that a lot of the regional and large banks have. So it's not as big a deal. Some of them have modest benefits from lower rates and some have modest, a modest negative impact, but it's not generally a big deal.
I'm curious your take, Moshe. We talk so much about a soft landing, right? Can the Fed engineer a soft landing? What does it mean for consumers? What does it mean for investors? Yeah. And based on the data that you're seeing in terms of spending patterns, do you think that is possible, that the economy can avoid a recession as we see stocks still sitting near record highs?
Yeah, so definitely is something the Fed would like to do. It seems like it's doing a decent job towards it. I think, it's a little bit above my pay grade in terms of the biggest macroeconomic questions. But I would say that we do watch employment levels, and employment levels have been relatively healthy. And so avoiding it does appear, if you went back exactly a year ago, I think the market was convinced that the Fed was going to have to engineer a recession. It was going to have to cut off growth enough and cause higher unemployment. And now we're less concerned about that. Obviously, there are still risks out there that things could go the wrong way, but I think it feels like we're in a better spot.
Moshe, it's great to have you on the show. Of course, we'll be watching these banks as the earnings season unfolds. Moshe is with TD Cowen, a banking
Thanks so much.
Analyst there. Thank you. All right, well, sticking with the banking sector, the chief executive of NYSE-listed online bank Synchrony, Brian Doubles, recently joined our Lance Glynn on the Inside the Ice House podcast to discuss the company's recent success and some of its latest business moves. Take a look.
Yeah, we're really excited about the acquisition of Ally Lending. I'll tell you, it's a business that we had looked at from afar. Mm-hmm. I got to know the CEO at the time, JB, pretty well. And, that business for Ally was always kind of subscale. It wasn't the core of what they did. And, I had asked them a couple times if they'd have any interest in selling it. And finally, he called me and said, yeah, okay, why don't we talk and see if we could get something done. Because that business, while subscale for Ally, is exactly what we do. It was a perfect fit. We're in health and wellness already. We're in home and auto. They had some different product capabilities that were attractive for us. And but when we looked at it, there were big synergies. On the revenue side, we thought we could grow this business. We can leverage our existing merchant provider base to grow it. And so it was just a perfect strategic fit. And frankly, I wish I could find more of those out there. It was one of those like, hey, this is a no-brainer. We should go do this.
So in May of this past year, Synchrony, Virgin Red, and MasterCard announced a multi-year agreement for the new Virgin Red Rewards World Elite MasterCard credit card program. That's a mouthful, to say the least. The partnership will make Synchrony the exclusive U.S. issuer of a multi-category travel credit card program for Virgin Red. In what ways does this partnership help differentiate Synchrony within the industry, and how does aligning with Virgin Red and MasterCard benefit company goals and ultimately objectives?
Well, first, we're really excited about the partnership. I mean, it's an incredible brand, and we're just thrilled that they selected us to partner with them on the financing products. I'll tell you, it's unique in the sense that, there are plenty of airline cards out there. There are plenty of hotel cards out there. There are cruise line cards or financing products. This combines all of that under one umbrella with an iconic brand. And so we couldn't be more excited about it. We're looking forward to launching it and growing it. And any program like this that, we would consider groundbreaking, PayPal is a good example. Then we launched the Venmo card, and on Venmo, we had the technology to optimize your rewards. So it just automatically put the customer in the highest reward category, and you didn't have to go in and select everything. And that was, at the time, that was pretty groundbreaking. So we're always looking at ways to do that. We want to find something that's unique and exciting and different, because one, we learn a lot from that. It helps build our brand, but we can also take some of those learnings to other places in the portfolio.
Well, the good news is that you can listen to these as well as any previous and future Inside the Ice House episodes wherever you get your podcasts. And you can also watch full videos of these episodes on tv.nysc.com. So join us every Monday for conversations with leaders, entrepreneurs, and visionaries like the Synchrony CEO who you just heard from. You can scan the QR code here to listen. Well, we still have much more to get to here at NYSC TV Live as stocks hover right near record highs. Stay with us. We'll have more on the other side of this short break.
Joining me today on NYSE Floor Talk is Marcelo Bacci. He's the CFO at Suzano. Marcelo, it's wonderful to see you again. Thanks for joining me.
Great to be here again with you, Judy.
Thank you. So now, Marcelo, Suzano is completing the largest investment cycle in its 100 years history and will soon begin operations on a new factory in Brazil. So tell me, how does this impact the company's future?
Judy, this is going to be the largest single line of pulp production in the world and the most efficient one in terms of cost of production. So this is going to be a big transformation for the company in terms of helping us deliver one of our main objectives, strategic objectives, which is to enhance our position as the lowest cost producer of pulp in the world. So this plant is a 2.5 million ton plant, which is huge. Will increase our capacity by something like 20% in a very, very efficient way. So we are very excited about this, and it comes, at a very special moment in our history, which is when we completed 100 years.
We typically see companies pressuring their financial leverage while making large capital investments. How has Suzano been able to manage its balance sheet along the current investment cycle?
Yeah, that's a huge change for our industry and for our history at Suzano. Before this investment, I think every time a company would come with a plant of that magnitude, that would be a big step in terms of their capacity, which was our case last time. And now, although this is a very large plant, we have already a large base. So we have been able to make that huge investment. It's a $4.3 billion investment, leveraging up our balance sheet up to 3.5 times.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here above the iconic trading floor. And we, of course, are following the markets, the twists and turns, but investors showing resilience with stocks still hovering near record highs. And that's as inflation continued to show signs of cooling in the latest report out this morning. Those consumer prices up 2.4% from the same time a year ago, up 0.1% from the month before. Traders still expecting that the Fed will cut interest rates by 0.25 percentage point at the Fed's next meeting, and all of this coming as earnings season is set to get underway. Well, I do want to bring in my colleague, Trinity Chavez, who is down on the floor of the stock exchange, covering what we have in store, of course, today, Trinity, and talking about some international guests that are making their way through the NYSE. What can you tell us?
That's right, Kristen. But before that, I want to dive into the international IPO market and explore how the NYSE is expanding its global footprint. So to discuss this more, I am joined with Cassandra Sire. She is the head of international markets for the New York Stock Exchange. Cassandra, how have you seen the IPO market on a global scale evolve in the last year?
Sure. First of all, thanks for having me on the show, Trinity. It's good to be here. It's been a very interesting 2024. The first half of 2024 has actually been pretty robust. We have had more deals in the first half than the last 2 years combined in IPO market, in new IPO proceeds. And on the international side, we have been really, really busy going around the world, making sure that companies from outside the United States also have the same access to the U.S. capital markets and are able to come to list at the NYSE. So overall, I think 2024, first half, super exciting. And more to come. I think there will be companies looking at a 2025 window as well. So we expect the pipeline to be very robust.
Can you share some of the key trends that you're noticing right now when it comes to the broader IPO space on a global scale? And why do you think these international companies choose the NYSE to list as opposed to other global exchanges?
Yeah, so I think broadly speaking, companies for this year, they're starting to focus more on a kind of the profitability, the financials. They wanted to make sure that investors are able to see either a clear line of sight to a profitability or that the company they're building has a very strong management team. They're very much looking inward to try to make sure that they got all their ducks in a row so that when it's time for them to come out for an IPO roadshow, they'll be ready. They have strong financials and they have a great management team. So the trend really is more around how do they amplify their story. And it really ties in with NYSE and what we're really good at, which is offering a platform to let companies tell their story. And I think international companies, sometimes they have products and services that are fantastic, but are not yet well known to the US investor base.
And there's a lot of headlines right now that's moving markets, right? I want to talk to you about how you're seeing the impact on international markets, on a capital markets perspective, if any, right? And also how the geopolitical turmoil overseas is also having an impact on your deal flow.
Yeah, I mean, look, I think we try to control what we can control, and things that are outside our control, we can't really, put too much focus on that. Geopolitical concerns will be one of those. But for what we do, as a trusted advisor to our companies and issuers looking to tap the market in the U.S., we really want to help them think about how to get ready and also focus a little bit more around the right market window. And market window, it's really difficult to predict, but, it's really a lot of times based on where there are lower volatility in the marketplace. The Fed is starting to reduce interest rate, which is heading in the right direction. This is a U.S. election year as well, so I think companies are trying to see whether it is a window before the election time or in 2025. So what we do is we work closely with companies on when is the best time for them, and every company has a unique story and a unique time window. We just work closely with them to ensure that they are ready.
And what role do you see international companies playing in the long-term growth strategy for the NYSE?
Yeah, so I'll just give you some data point. We have 2,400 companies globally listed on the New York Stock Exchange, and about a third by market cap is non-US company. That is a pretty tremendous numbers. And so, it will continue to play an important role at the NYSE. We do think that international companies love coming here because the US is the deepest in liquidity, the largest by investor base as well. So non-US companies want to come here and want to continue to start their debut as a publicly traded company on the New York Stock Exchange.
All of these people are also coming together here at the NYSE. As I spoke to Paula earlier about kicking off inaugural International Day here, which you have also been an integral part in spearheading.
Yes. NYSE International Day today is a very important event for us. Why? Because we believe in getting companies from non-US or outside the US to come here and talk about international collaboration. It is not easy to have companies come from Europe, from Latin America, from Asia, from Canada to convene at one spot on one day. Yeah. So the stars have to be aligned, and we have spent months preparing this because we do believe when companies come together, they're able to create this amazing innovation together, and the energy is contagious. So we love this, and we want to keep doing this every year.
Well, thank you so much, Cassandra, for joining me.
Thank you. Thanks, Trinity.
Take care. I'm going to bring Kristen Scholler back in from Studio One. Kristen, it's been a great day here at the exchange. The market is reacting, but I do also want to point out a few notes when it comes to the international IPO sector. We have hundreds of international companies that are listed here at the New York Stock Exchange, upwards of almost 500. And that total market cap combined is over $10 trillion. And these companies really represent more than 45 countries and span various industries, further highlighting the global reach of the NYSE. Kristen.
Trinity, of course, great to get the take that you've been showing us from the floor. Great to hear from Cassandra as well. As International Day will be happening here at the Stock Exchange. The U.S. market's very liquid indeed. And that's going to do it for today's coverage of NYSE TV Live. Trinity Chavez on the floor with me. I'm Kristen Scholler in studio. Thank you.
I'm reminded that it's not about the destination. It is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege.